We want to take a closer look at the markets with the help of Keith Fitz-Gerald, principal of Fitz-Gerald Group. Keith, good of you to join us. Really appreciate you making the time this morning and evening over there where you are. Now, Mr. Trump, the president, will decide in 2 weeks whether or not to strike Iran. Either way, the markets will react. What would be the scenario that brings about a worse reaction? And what would we likely see?
Oh my goodness, those are very complicated questions, actually. You'd think they would be simple, right?
Right.
But thank you for having me. Here's my thinking. So, anything that introduces fear, uncertainty, or doubt, the American acronym is FUD. Anything that introduces FUD is going to react in a thud because traders aren't going to want to stick around. They're going to sell quickly to deleverage themselves. On the other hand, anything that introduces a calming, a sense of calm, an apparent, lack of a military strike, I think is going to be very good for the market and well received. There's still trillions of dollars on the sideline that want to go to work in great companies. And that's simply on hold right now while this sorts itself out.
Okay, and so we need to talk about the US. If it doesn't strike back, could oil prices then stabilize? Or perhaps we could see just an easing of the price swings?
I think that's very likely. If the Middle East can calm down or even just de-escalate a little bit, short of a closure in the Strait of Hormuz, for example, or the catastrophic destruction of an oil field, I think it's logical that prices will relax. There's a report from JP Morgan suggesting, 120, 130 and an extreme movement to the upside. I think the $100 range is more likely if the FUD shows up.
Really starting to like that now. I'm just curious at this point, and I want to get your thoughts on this, Keith. How are equities reacting to the Israel-Iran conflict right now?
Well, they're reacting surprisingly well. And this is a sort of a tribute to modern finance, right? Because we have a radical increase in computerization. We have a tremendous amount of money that wants to go to work. And for the first time in a long time, we've had many professionals get caught on the sidelines, but the average retail investor begin buying in the April lows. So it's Wall Street that's offsides here. And that's where we got the uncertainty because they don't know what to do next. Conversely, the individual investor is relatively calm.
So, what then is looking attractive right now to investors as this sense of calm starts to blanket the markets?
Well, I don't know what I would say blanket, but it's
It's a really
it's
thin blanket. It might be a
yes,
fragile blanket.
a tropical blanket because it's certainly not one for the north.
Yep.
All joking aside, I think that there's a very aware consumer, a very aware investor that artificial intelligence, for example, is still very, very early days. And it's going to alter the case of humanity and the trajectory of humanity. And my sort of take on this is that every business will adapt, adopt, or die. So I think that's a good sector. I think customizable medicine, we're on the cusp of that. So medical companies are attractive. If we're looking at data companies like Palantir, for example, or just a plain old vanilla dinosaur juice, Chevron, great global footprint can play onto those oils and you get a great dividend.
Okay, bonds, let's look at that. They were in relative trouble just before this
Yeah.
two-way exchange of fire. Distraction somewhat from the US debt story. Keith, have they found some stability for the time being?
I think that's probably just temporary, and that's temporary as long as the angst continues between Chairman Powell and U.S. President Donald Trump. That's not a smooth relationship by any stretch of the imagination. The bond market, of course, is very volatile. It's very quantitative. I think the smart thing for investors to do now is to continue to take those short durations, the 0, 30, 6, maybe a couple years at most in terms of the length of the duration they seek. The long bonds are still something to be seen.
Now, Fed Chair Jerome Powell says the rate path is unclear. I don't think he's really given any clear signal, to be honest, in the time that I've been doing this. But the tariff impact is coming. That's what he said. By your calculations, how much of an impact are we looking at here? Enough to throw rate cuts to the wind, or those two scheduled that he noted in his notes that's still going to go through?
Well, that too is a very tough one because, I've been harshly critical of Chairman Powell. He's not stupid. He's very, very intelligent. But my contention is the Fed uses rearward looking models. They wouldn't know how to proactively do something if their lives depended on it. So I think they're using broken models. They are flying by the seat of their pants and they're making it up. Now, that said, I don't run the place, so I can't do a lot about that, right? But what I do think is that Chairman Powell has waited too long. I think the president is on to something in terms of he's waited too long, but the chairman is just not moving off that dime because that would be tantamount to admitting he's wrong.
Okay, Keith, let's take a look at Asia and Asian stocks. So they've also slipped during this whole week of bad news. How much of a dent has the conflict put on Asian equities? I mean, do you foresee this being a sustained downtrend, and also whether or not proximity will breed rippling effects?
No, I think that Asian companies are going to prove out to be remarkably strong through this. And I think the surprising reaction that I'm going to see, or that we're all going to see really, is new relationships that have never been explored between Asian countries and companies. So of course, the anchor there, China wants to be the anchor. Beijing very much wants to be the center of that orbit. I'm not sure that'll arrive immediately, but again, I think this is one of those instances where the Asian companies as a whole are going to continue relatively unscathed, and that's a sign of strength.
Are there particular markets in the region that are catching your eye more than others?
That's a tough call. I think Japan is always interesting. I think the Chinese market, there are specific companies on the mainland that I think are really intriguing. BYD, for example, is a strong one because it's playing to global markets. I'm not so much interested in investing in China as I am because of China, if that makes sense.
It does. I get what you're saying. Now, I'm glad you mentioned Japan because we earlier had a discussion with someone else about the Nippon Steel takeover of U.S. Steel. Want to get your thoughts on that? I mean, with Nippon committing an additional $11 billion in investment by 2028, I'm wondering what kind of impact this will have on the wider steel industry. What's going to happen to steel prices as well? Because with Nippon now being world number two, shielded from Trump's steel tariffs, those prices could go down as well.
Well, I think that's an accurate assessment. And the question is whether Japanese managers just got lucky or whether they really have a strong vision here. I'm hoping they have a strong vision, but I'm not holding my breath yet.
Okay, we want to talk about the week ending. It is Friday where we are
Yes.
already. I'm
Thank
sure.
goodness.
I know, right? After this whole week, and I'm sure you're looking forward to the weekend as well. So let's
Yes.
cap off our conversation. What are you expecting for next week?
Well, again, if we can have calmer, minds in the Middle East, I'm expecting Monday to come out of this pretty strong, actually, because that's going to be a sign that investors can get back on the gas, meaning they can go buying. And I think that the best names are going to stick to the top of the leaderboard. I also think that investors would be wise to focus on any weakness in tech, in particular, the top names as an opportunity because we're such early days in the AI, we're such early days in anything related to the digitalization of our planet that's as compelling as it gets.
Keith, here's hoping we will get that relative calm, not just in the markets, but in the world as well. It was a pleasure and a delight to have you on the show. We hope it's not our last conversation with you. Take care. Have a good weekend.
Thank you. I would be honored.
That was Keith Fitz-Gerald. He is principal at the Fitz-Gerald Group, giving us his assessment of what's been happening in the markets this week.